Good, brother. Thank you. It would have been nice to catch a little trade today, but unfortunately, I didn't catch
The
anything.
market is whoop-de-doo, man. It's fucking crazy.
I mean, for some people, it's great. It's just the way that I personally trade. It's just when it's yo-yoing like that, it's not the best.
Yeah, Neo got some good trades.
Yeah, Neo does really well in these conditions. To be fair.
Yeah.
Neo does really well. There's gonna be some months where I do better, and there's gonna be some months where he outperforms. And in July, he's been performing like really, really well.
Yeah, I've looked at E8 has some good funded E8 markets.
E8.
Yeah, you can get a 10K account for $80. Max drawdown 6%, payout 80%.
What?
And you can pass it in 1 day. No
consistency rule.
No, it doesn't seem like that. Not what I've been looking at.
Really?
Yeah, I can screen share and show you real quick.
Yeah, bro.
Oh, wait, the drawdown type is dynamic, but I don't know what that means. It changes, I guess, when you get... here we have it.
Yeah, but at the end of the day, I don't know, these sketchy firms, like, are they really going to pay you out? That's the thing.
Yeah, that's the thing. I'm going to check.
Because you might as well stick with something that is more trustworthy. Marius passed his phase 1 challenge today.
Oh no, it's a warning.
What warning?
Yeah, on Trustpilot, they have a warning.
Yeah, but you got to be careful with that, because sometimes even the good ones have a warning. Even Vantage sometimes has a warning. Hello, Eugene. How we doing? Even even Vantage has a warning and all of these things. Let's wait for some people to get in the call, and then we could potentially start. I hope you guys have a couple questions for me.
I have many today, man.
It's gonna be a long one. Fuck.
Yeah, bro. You gotta be sitting here for hours, 5 hours minimum.
If that's what it takes, man. If that's what it takes for you guys. Jesus. You're trying to kill me.
No. I might get some questions, like wonder some things when we start going, you know?
Okay. Ray says
right now my
my
mind is pretty fucking wiped right now after 11 hours work.
Yeah, bro, you must have had a busy day.
Yeah, I've had it, bro, and it sucks, bro. I can't, bro. Not much time studying, not much time like being able to do shit, you know.
Hello, Amila.
But in the weekend, I'm gonna study.
Yeah, study and lock in this weekend. I can't believe it's the weekend already.
Yeah,
tomorrow, guys. Holy shit.
Days goes fast.
Time flies, man. Time absolutely flies. Ray says entry model. Okay, we could potentially we will tap into the entry model as well. But the video has already been posted, Ray, about my entry model in the Discord group. You go to tutorials, and you'll be able to find entry model in tutorials right here. I made a whole video basically breaking down how I'm entering from these buy zones and sell zones. So take the time to watch these. It's all here, big dog. This will help you understand more than we can briefly touch over it. However, this will be more in depth. Who we got in here? We got Kathy in here. We got Bill's the fucking man. We got Gustav. We'll see if potentially anyone else wants to join as well. If not, it's going to be an early night, which is quite nice.
Yeah, we have been inside, you know, the daily fair value gap we marked after market closed a couple days ago. I think it was 3 days ago.
Yeah, we're currently trading inside of that.
Yeah, we have been in it for a long time now, man. What is going to happen?
Yeah,
it has been up touching the previous day high as well. Not this one though. I think it was the one we placed out the same day as the fair value gap, the daily one.
How about my confluences? My confluences I put in the Discord group in education. If you scroll up, these are, I made a slideshow about all the confluences that I use. for my strategy right here. So have a look at these, but I will make a video breaking down each one of these in the future. But I kind of just I go through them in my live streams anyways, how I put everything together. But yeah, this is basically all my confluences in one. Hello Sam, how you doing, big dog? Nice to see you, G.
Hello.
Hello Marius, hello Mike. Hello. Who we got in here? Let's go, baby. Marius, how you doing, bro? How was fishing?
Not bad. I lost one.
Yeah, you locked one? Did you take it home to eat?
No, I lost it.
You lost one.
Run away.
But was it a quiet day? Was it only one fish?
Yeah, I all the time I'm going for one hour or two, especially after I finish the work for the week. Most of the time I'm going on because it's next to my house. It's like 2 minutes from my house.
You just go in there to chill. No wife, no one to beat you up, man. You just go there to chill and relax.
Yeah, exactly. Nothing. Only me and the fish.
That's the best, bro. You must have a lot of self-reflection during those times as well.
Yeah. I'd say even like that if you want.
I would. If I was to go fishing on my own in that place, I would just use that time to think as well.
Yeah, I keep still thinking about my mistakes and
bro, the way that you passed that funded account, bro, today, congrats, G.
So basically I bought that one at I think it was 3 p.m.
Yeah.
And at 5 p.m. it was already passed.
Yeah, bro. It was insane. You took one trade and I was like, you're gonna need to do another trade for the consistency rule. And then you're like, okay, let me take another trade. And then you win that trade and you get what you need. And then you're just like $20 off the consistency. And then you just take another trade and then you got it right, bro. You hit like 3 trades in a row. Hello, Alea.
Yeah. So basically, I wanted to tell you. You know, I show you my trading view.
Yeah, with the indicators and stuff.
Because I took it a trades after I was looking on the trading view. So it's insane, that one. If I'm gonna start understanding correctly, bro, that is awesome.
The TJR indicator.
Yeah. That I was showing to you.
Yeah. With the fair value gaps and everything. Yeah. And also the one that tells you the time frames if it's bullish or bearish.
Yeah. No, but I don't use that one. I think one time in a life. I was just to show you, and that's it.
Okay.
But I think this one, the basic one, is the best one because you can see FEG, you can see order block, you can see everything.
So, I mean, since you're already stalking, I mean, we can just start with you, Marius. Do you have any potential questions, brother, that you would need help with? Any topics, any things that you're struggling with?
The thing what I still struggle is the inverse.
Okay.
The inverse, let's say, order block, and after that, the inverse 5 minutes FEG. I still don't understand how they work when it is one, let's say, bullish FEG or a bearish FEG. So basically, I don't know after, let's say, you have order block, you have FEG.
Yes.
And you have wait for the confirmation. You wait. That is the thing what I am struggling because I don't know where it's gonna go. It's gonna go up or down.
Do you know how to look for an inverse? Do you know what an inverse is? How to find one?
No, I was looking at you, but I still don't. I'm not understanding.
Okay, but you can find fair value gaps now, right? Your indicator also helps you with the fair value gaps.
Yeah. Even without that one, I can see the FEGs.
Okay.
On all the time frames, I can see them.
Well, all an inverse is really, bro, is just an FVG that got closed above, right? So if we're looking at the chart here, can you see my chart?
Yeah.
So right now in front of us, we have a bearish fair value gap, right?
Okay.
Right here, we can see that 3 candlestick patterns, yeah, and it's the black candles, right? It's a bearish fair value gap. The sellers created this. So what would we expect is that if price was to come back into this area, we would expect price to continue lower, right? Because it's a bearish fair value gap. The sellers created it. However, we can clearly see that the moment that gold hit this support level, I don't know what area this was exactly, but gold hit 4,024 and we decided that we wanted to reverse higher. So the buyers, what they did is they closed above this bearish fair value gap, which now, this has now become an inverse, right? Before it was a normal fair value gap, but the minute that a candle closes in the opposite direction, then now this becomes an inverse, right?
So basically need to be closed above the FEG.
100%, exactly like that. Okay. And so this is an example for a bearish inverse, right? This is an example for a inverse in the bearish scenario, right? This is when you're looking for buys. You want to look for what? Bearish fair value gaps to get inversed, right? If you're looking for longs, you want to wait for bearish fair value gaps to get inversed. If you're looking for shorts, you want to wait for bullish fair value gaps to get inversed, right? Because we're trying to go in the opposite direction. For example, look up here. Let's say that gold came up to this level of resistance up here at 4158. Okay, we had this bullish fair value gap right here. Now, what would we expect? We'd expect that if price was to come back into this area, then price would do what? Continue pushing higher, right? Because it's a bullish fair value gap. However, the minute that the sellers closed below it, right? We didn't close below it here with this candle. We didn't close below it here with the second candle. This third candle finally closed below it. So we officially got the inverse. And so what happened? When we got the inverse, price came back into it and then continued pushing lower. Okay?
Pushing lower, yeah.
So that is basically as simple as an inverse is. It's just a fair value gap that got closed in the opposite direction, right? If you're looking for longs, you want to see the bullish fair value gaps getting disrespected, okay? And if you're looking for shorts, you want to see the bullish fair value gaps get disrespected. And if you're looking for longs, you want to see the bearish fair value gaps to get disrespected. Does that make sense?
Yeah, that makes sense now, yeah.
Yeah?
I'm gonna keep an eye and look more.
And for example, even here, look. This is a bearish fair value gap, right? Price came up and we closed above it, right? With this candle, we closed above it. So this technically should tell us that price wants to continue higher at some point, right? Doesn't mean that we're just going to be entering longs, especially how, you know, price already did quite a big move from here to here, right? Without a retracement. So, however, what we can show, it does show us that these bearish value gaps are getting inversed by the bulls, right? The buyers are showing more strength than the sellers, and so potentially price is likely to push up higher. Okay, does that make sense? So if we were looking at the example on Nasdaq that I was looking for today, on Nasdaq, a few days ago in the group I posted, if we inverse, I don't know if you guys remember this, I said if we inverse this 4-hour fair value gap, right, then I would expect Nasdaq to continue selling off lower, right? And this was just unfortunate because we inversed this 4-hour fair value gap with a huge candle, right? And this is just unfortunate because it really just messed up our whole entry. but ideally I would have loved for this 4-hour candle to close just somewhere around here. Okay, and then we would have been able to look for shorts, but unfortunately this closed all the way down here, so it messed up our entry. But you can see that the minute that we inversed this 4-hour gap, price just sort of started continuing to go lower, right? So we can use fair value gaps to basically let us know when the market wants to change direction, right? That's basically what you want to be using fair value gaps for. Hello, Anna. Managed to catch NY longs today? Hell yeah. Did you print? Nadine, thank you for the follow. How do we mark the chart if above the IFG is another bullish IFG, like in your screen? How do we mark the chart if the IFG is another bullish IFG, like in your screen? Where was it? On gold? Was it on gold? Well, ideally, you'd want to wait for both fair value gaps to get inversed, right? Ideally, you'd want to wait for both. If you're looking for an entry. All right, let's see if we can find an example. All right, so for example, look. I mean, this is just one big one. Like if you see this huge bearish 5-minute gap right here, right? Let's say price we wanted to look for buys at this area here, right? This was a buy zone. Let's just do for example purposes. This was a buy zone and we wanted to look for higher prices. Right? If we didn't manage to get an inverse, and if we didn't manage to get an entry this early right here, because we had a bearish fair value gap right here, right? Bearish FVG right here. You can see the minute that we inversed, right? Price closed above it. It showed us that price wanted to change direction, and that was the moment that price started pushing up higher, right? However, look, we have another huge 5-minute fair value gap up above, right? So this is where things get a little bit risky, right? What you could do is from this 5-minute inverse right here, you could look for a long targeting this 5-minute above, right? And you can potentially take TP1 here and go break even. That would make sense if you manage to get a good enough entry, right? You can put your stop loss below here for a 1-to-1 risk to reward, and you can catch a 1-to-1 risk to reward to the top of this, to the start of this 5-minute, right? And then you go break even, and so at least you're safe. But if you want to play the safe game, right? Ideally, you would want to wait for this whole 5-minute fair value gap to get inversed, right? Which is just going to be unfortunate though in this scenario, because if you were to wait for this whole 5-minute to get inversed, you would be basically waiting for this candle, right, up here. This is the candle that inversed, and we had a huge candle, right? This one didn't inverse, we didn't close above it, right? The start of the fair value gap is here. This is where the start of the fair value gap is, right? This candle, we wicked to it, but we didn't close above it. So this was not a confirmed inverse. Price could have easily, right, continued pushing lower from here. That's why we want to wait for the candlestick closure above it. And we got it with this one. And so ideally, this is where you would be looking for entries. So what I would have done probably is I would have seen that we created a new bullish 5-minute, right? And I would have waited for price to tap into it. The minute that price would have tapped into it, I would have looked for an entry to go up higher. But we never ended up tapping into it. And that's why price continued, pushing up higher without us. However, to be safe, this right here would have been the best entry, right down here. You can see prices in our buy zones, right? We would have inversed this gap right here. This would have been the ideal entry. We would have also got what? A 5-minute break of structure right after the inverse, right? If you didn't want to only enter from the inverse, you wanted to wait for a 5-minute break of structure, we would have got it right here, right? With this candle close up above. So your entry could have looked something like this, right? Stop loss below the low. Okay, and then you would have targeted higher. But this would have been a risky long because you're literally longing inside of a 5-minute bearish fair value gap, right? I hope that makes sense. Should we buy NASDAQ now? We're going to check NASDAQ, bro. We're going to check NASDAQ in a second. Gotta go. Have a nice one. Thank you, Anna. See you around. Are you trading FVG, IFVG, Mr. Potato? Yes, I am, big dog. I am. I'm just explaining. I'm explaining what they are and how they work. Eugene, does that make sense, brother? Does that cover it? If there is if the first fair value gap gets inversed and there is another one right above it, right? If it's really close together, right, then you want to wait for both of them to get inversed. But if there is some space between them, then you could potentially, use the second fair value gap up above as a take profit. Does the company you're trading for matter? Like as in the broker that you use, does it matter? I mean, yeah, it matters. If you pick a broker that doesn't have good conditions, then you're basically, your spreads are going to be fucked up. They're not going to be able to pay you out, right? The withdrawals take forever. So of course it's important to have a broker and a platform that you like. Me personally, I find myself with PU and Vantage. That's what the Discord uses as well. NQ seems totally bearish. We were pretty bearish, Sarah, to be honest, on NQ, but however, we have tapped into an area which is very interesting, right? On NQ, we tapped into a monthly fair value gap, and also we took out last month's low. Now, I do believe that NQ is going to want to keep pushing lower. However, we are entering some pretty important zones right here on NQ, to be honest. But I do believe that we do still have some downside. Which time frame makes more solid? For the IFVGs and for the FVGs, higher time frame holds higher power, right? So a fair value gap on the daily, on the weekly, on the 4 hour, on the 1 hour holds more power than a fair value gap on the 5 minute, for example, right? Or on the 15 minute, right? Higher time frame holds higher power. So usually we use fair value gaps on the higher time frame to show us the direction of the market, and we use the fair value gaps on the lower time frames for our entries, right? That's going to be the difference. The higher time frame fair value gaps show us direction, right? Where does price want to go? And the lower time frame fair value gaps show us execution, how to refine our entry. Some weeks ago, you were explaining time frame alignment. Could you repeat? Yeah, so basically time frames are just like Russian dolls, right? This is the example that I always like to use, right? Every single time frame is the same, okay? Price is fractal, right? But what I mean by when I say price is fractal, it means that if I was to remove the time frames, right, up above, you would not be able to tell whether I'm looking at the daily chart, where I'm looking at the weekly, or I'm looking at the 1 minute, right? The only reason you can tell is because you can see the time frames above. However, every single time frame looks the same, right? But as you basically scale down lower and lower, you will be able to see more data, right? And so ideally, the daily, the 4 hour and the 1 hour are the time frames that you want to be analyzing on a day-to-day basis. Whenever you hop onto the charts in the morning, you want to always start on the daily, right? Where does the daily candle want to go? Because as day traders, the daily candle is the most important thing that we need to be able to understand, right? Because that's what we're trying to catch. We're trying to catch daily price action. So once you've understood where the daily time frame wants to go, right, your job is to then scale down lower, right, into the 4 hour, into the 1 hour, to basically refine your entry, and not your entry, but basically keep building your story, right? So let's say on the daily time frame, we come on in a new day and we see that there is the daily high. We see that yesterday's daily high and yesterday's daily low has not been taken yet, right? And we also see that price is closer to yesterday's high than yesterday's low. So in my mind, I'm already expecting, okay, potentially price today is going to want to come up to take yesterday's daily high. So when I have that idea on the daily time frame that that's where it wants to go, the next step is to then go in the 4 hour time frame. And in the 4 hour, I ask myself, is there any fair value gaps, right? If we're looking for longs, right? We're looking for longs to take us up to the daily high, right? I'm going to be asking myself, is there any bullish fair value gaps that are going to take me up there, right? Is there any 4 hour fair value gaps that we haven't tapped into yet? Or are we currently reacting from one, right? Basically, your 4 hour and your 1 hour are your delivery time frames, right? The things that are going to deliver you to your daily bias, right? Your daily story, your daily vision. And then your job in the lower time frames, right, on the 5 minute and the 1 minute, those are where you eventually execute, right? So I hope that sort of does make sense. You know, you do want to pay attention to the monthly and you do want to pay attention to the weekly, but usually I like to do that at the start of the week. Okay, because you don't need to be paying attention to the monthly and to the weekly time frame every single day, right? Because we're day traders again. So you just want to have a look at it once or twice, understand where the asset that you're trading wants to go on the higher time frame. Okay, and so that you can have that idea at the back of your mind, right? So for example, on NASDAQ, today was quite an important day, right? Because we ended up coming into a monthly PDA rate, right? A monthly POI. POI stands for point of interest, right? Which was this monthly fair value gap. Okay. And so obviously when price was all the way up here at some point, right? I'm not going to be thinking, oh, let me take shorts down to the monthly fair value gap, right? That's ridiculous. That's retarded, right? Because it's a monthly fair value gap and we're day traders. However, for example, today, okay, this was a potential trade that could have been taken, was if price was literally right here and we know that we have a monthly fair value gap right below, then that's when we can be like, oh shit, we have a monthly fair value gap right next to here. You know, that's a big higher time frame target. Potentially price is going to want to come down and trade into it, right? Because this is happening in one trading day. So that's really the only time you just want to basically have the monthly and the weekly at the back of your mind. But on a daily basis, the daily, the 4 hour and the 1 hour are the time frames that you're going to look for your direction. The 5 minute and the 1 minute are your execution time frames. If you're just starting out, I would even recommend that you stay out of the 1 minute time frame, right? Because that is just going to confuse you because there is so much happening. I would honestly just stick with the 5 minute for now. And then once you can get better at reading the market, then you can start scaling down into the lower time frames. You're very excellent explaining those ideas. Appreciate it, man. Appreciate you, Mr. Potato. Thank you, brother. Are you buy at the bullish green FVG? No, I'm not in any buys as of right now, Kotobia. I'm not. So, right, Marius, does that answer your question, brother, about the inverses and stuff?
Yeah.
And the and the time frames.
My trading view and do some examples.
I mean, bro, honestly, like your indicator that you have on your chart, it already basically simplifies finding the fair value gaps already, right? So your job basically is just to be waiting for a candlestick to close above them, right? And then you can see the inverse very clearly.
Yeah. I will keep do.
For example, look on Nasdaq. Look, right now we tapped into this monthly bullish fair value gap, right? If we look on the 4 hour, what do we see? We see that we have this 4 hour bearish FVG, right? So right now this is a bearish 4 hour gap. So right now what we would expect is that price was potentially going to trade into this area, okay, and then continue selling off lower, right? That is what we would expect. However, if we see that price is going to come to this 4 hour fair value gap and we're going to close above it, okay, then that potentially means that, well, this fair value gap is going to get inversed. So Nasdaq might tell us that, oh, maybe we want to change direction and continue pushing up higher, right? So maybe we can potentially look for longs targeting these highs up here, right? Because we can even see that these highs are pretty equal, right? Relatively equal as well. And then we also have another 4 hour gap up here, right? So this is slowly how you can use the inverses to know, okay, market is potentially changing direction, right? Let's see where we want to go. Does that make sense?
Hell yeah.
Okay, fuck yeah. Now, let's see who's next. Kathy, do you have any questions for me, darling? Is she here? Is Kathy still here? Kathy. Oh, she's gone AFK. Kathy's gone AFK. All right, we'll come back to you, Kathy. Bills, big man, Bills. Do you have any questions for me, brother? Yes, Kathy. Hello. Yes, I can hear you.
Sorry, I cannot talk right now. You can hear the monster.
Oh my goodness, the monster is awake, or what's going on with the monster?
He needs to learn, you know.
It's time for bedtime. Tell him it's time for bedtime.
But I don't know. Anyway, I was just gonna listen to you guys because
Okay.
I have a lot of question in my head, but it was a long day. It was a shit trading because of the yo-yo thing.
Yeah, it's yo-yo,
for
isn't it?
me.
It's yo-yo, crazy yo-yo.
It was crazy. But I was just gonna listen, and if I have something in my mind while you are talking, then I'm just gonna talk.
Okay, awesome. Well,
Thank you.
feel free to just ask me anytime you want, okay?
I know. Thank you so much.
Bills, big man, Bills, man. What's up, brother? Have you got any questions, broski?
All good. I just want to say thanks to Marius because you know what, I wouldn't have thought to ask that question myself about the inverse FEGs and how to spot the candle closure above or below, depending which way you're going. I just got a question also about the, the trading view indicator.
Yes, spiky engine.
How long are we looking for in terms of time frame for that? I want to see that.
Yeah, I want to see that too. I'm thinking like it should be ready by the end of this weekend. On Sunday it should be ready. Now in terms of it being perfect, probably going to potentially take another couple days, maybe a week, but no more than that, right?
I just want to see an example of it. So like if you could show me like a screenshot and then if you could post that on the Discord, it'd be nice. I just want to have like a
I have the script for it, right? The script is ready. It's just got errors. So as soon as the script doesn't have any errors in it, then I will be able to make it public and add it to my trading view, and I'll send you some screenshots of how it looks. But basically,
nice.
I've told it exactly the way that I trade and the way that I find these buy zones and sell zones. And so what it will do is it will use higher time frame. It will overlap all the time frames, right? So it will start off on the daily, on the weekly, on the 4 hour, on the 1 hour. It'll do all the time frames, mark out all the Fibonacci levels, right? Find out all the fair value gaps that haven't been tapped into, all of those things, and basically line up these buys and sell zones. So, and it will rank them. I will say this buy zone is like, for example, 9 points out of 10 because it has this many confluences, and it'll tell you the confluence that are there. So it's supposed to be something pretty cool.
Oh, brilliant.
We'll see. This is my first time that I'm building an indicator. So I mean, you're just gonna have to bear with me. It's probably gonna take some trials and tribulations and testing, but it should be good, right? It should be good. And eventually, like, what we could do also in the future is, well, obviously this indicator is gonna know exactly the way that I look for my buy zones and sell zones. And so eventually we could even build a bot that executes positions as soon as these buy zones or sell zones are tapped, and then you get the entry confirmation. So that could be like something cool that we could have as an extra in the Discord for those of you guys that, for me, I will definitely use this, right? I can chuck a little bit of extra capital on my bot that basically trades exactly the same version as me, obviously without emotion, so it's not going to be exactly the same, but it's a good way to diversify your income, that potentially when you're not on the charts, you know that your bot is still on the charts and trading, right? So that could be potentially something cool.
That would have to be quite tight though, isn't it? Like stop loss tight.
Yeah, so it would have to be like, at the minute that the buy zone gets tapped or the sell zone gets tapped, it waits for a 5-minute break of structure or a 5-minute inverse. It takes the trade. The moment that the price goes at least a 1-to-1 into profit, then it will basically trail the stop loss on its own to break even. And then that's how it's going to do it basically. And then the minute that it's going to tap a sell zone, it's going to exit out of the position from the buy zone, and it's going to wait for the confirmation from the sell zone and then take the sell zone short. So it's going to be crazy.
So basically,
if I get that one, I can leave my PC open and I'm coming with you in Bali. So you're gonna do money by himself.
Yeah, well, yeah.
Marius, you can focus on fishing.
You don't need
I'll
to.
come with
You don't need to have your. You don't need to have your PC open for that, bro. You have your PC closed. It's just working 24/7, basically.
Okay.
Yeah, so that's something cool that could be that it will definitely come out in the future. Like, you know, the Discord's only a month and a half old, so you guys we're early, man. There's still a lot of things to get built. We're only just gonna get better. And it's obviously everything's gonna be accessible to you guys. So you're no extra cost. You guys are already in the fucking Discord. That's the best part.
Hell yeah. I remember when the day when you was confused if you were gonna create or not the Discord.
Yeah.
But it's awesome. Honestly, it's way much better than Telegram.
Yeah, some people still prefer the Telegram because maybe it's a little bit easier. It is a bit easier to manage, but I feel like when it comes to the amount of things that I can post while it's still being organized, I feel like Telegram was a nightmare. You know, that's the only really beneficial factor of Discord, which I love, and also the voice calls. Right, it's so easy. You guys can talk between each other if you want. You know, so we couldn't really do that in Telegram. I was the only one that could start a call in the Telegram. So yeah, fuck yeah, man, fuck yeah.
Yeah, you always talk too much, but in a good way.
Yep. Stefan, man, what's up, brother? Hello, nice to you to join us, G. Stefan, is he here or is he just listening?
Oh, hello.
Gustavo, man. Gustavo, what's up?
Man? I'm here. Yeah. I have a question.
Oh,
a very simple
no.
one.
I'm going to be here until tomorrow, man. I'm going to be here until tomorrow.
Yeah. No, but it's about order blocks. How to spot order blocks and shit, you know?
Okay, we can...
Instead of like random candles, you know? Because
Yeah.
I feel like for me it's very confusing.
Okay. So order blocks is a little bit of it's a very, very simple concept, right? But it's a little bit trickier to find which are the good order blocks and which are not, because you can basically see them a lot during the chart. So it's just, we're going to go through that now. What is this? Have you tried what I've suggested about your indicator? Yeah. About the chat thing. I actually signed up on Gmail for it. And then the minute that I signed up with Gmail, it gave me like some timed out thing. And then I basically just gave up with it, Eugene. But it's just because I got impatient and I had to do something else. But I will check the chat again. It's basically like a chat, AI chat, like ChatGPT. I'm gonna check it out again. Do we have to wait for CE or fair value gap to trade off? Do we have to wait for CE or fair value gap to trade off, or wait until left price the area? What's CE, Potato? What's CE, brother? Sarah, yes. More, thank you for sharing the live. AG Trace, thank you for the follow. Mickey, thank you for the follow. User, thank you for the follow. Sub Gonzalo, how you doing, brother? Nice to see you, G. What do you think about the 6K Hynix? I have no idea what you're talking about. Mohammed, thank you for the follow. How to confirm the FVG? How to confirm the FVG? How to confirm the FVG? What do you mean, how to confirm? How to spot it? Well, spot it is how to spot it is a 3 candlestick pattern, right? So you can see, I mean, it's pretty simple to see once you start getting hang of it, but it's basically where there is a gap between the candles. That's what an FVG is. It's just an imbalance. It's something that shouldn't happen, right? The market is 50% buyers, 50% sellers. So whenever there is more buyers or more sellers, right, it creates an imbalance, which will leave a gap. So the market will like to trade back into it. To find them, it's just a 3 candlestick pattern, right? So 1 candle, 2 candle, 3 candle, right? It's when the third candle top wick doesn't touch the first candle bottom wick, right? Leaving a gap. That's how to find them. I think also there is probably an FVG indicator on TradingView. I'm sure some guys made one. I'm sure some guys made some free indicator that basically marks out the fair value gaps so that you can start, being accustomed to it. Basic FVG indicator 577 by Nacho. Yeah, there we go. So this is a good start, right? This one looks decent. Basic indicator by Nacho. This one here, basic FVG indicator by Nacho, FC 2803. You could potentially start putting this on your chart, and it's going to mark out the fair value gaps for you, so you can start identifying them for yourself. So yeah, this list looks pretty decent. It does mark all of them out. Yeah, it does mark all of them out. That's pretty cool, actually. Look at that. 1 hour fair value gap right here marks it out. 1 hour fair value gap up here marks it out, and it doesn't mark it out once it's already been inversed. All right, I guess when it has been inversed, it's just basically fades out. The color fades out. So yeah, consequent encroachment. Right, I'm gonna answer G's question now. Should I pay for TradingView Pro for more indicator access? I personally don't have TradingView Pro. The only reason why I'm thinking of getting it is just because when I share my charts in the Discord group, I'm not allowed to share my charts with TradingView free. But ideally in the future, I'll just be able to copy and paste it, and then you guys can basically copy the exact layout of my charts when I have my buy zones and sell zones, for those of you guys that want that. And also the TradingView Premium is you can go back in time, right? So you can back test, which is pretty helpful. If you want to, I mean, even though back testing I'm not the biggest fan of, because I mean, once you already have a strategy that is proven to work, the only really, you know, data that you want to accumulate is how you are in real time, right? There's no point in you going back in time and seeing how you would have reacted in this trade, because you don't know how you would have reacted in the trade until you actually are in the trade, right? That's when the real emotions kick in. That's when, you know, knowing your thoughts in real time, that's when the real, you know, testing, and that's how you can get the real improvements. That's why I recommend you journal, right? You journal your emotions. Don't just journal your data. Gold up, Dylan says, okay, thank you. I see many live traders using pro indicators and I thought about missing out. No, Keo, you're not missing out on absolutely anything. Most of these pro indicators, they are a paid subscription, so they will just say you need them in order for them to get paid. The way that we trade in the group and the way that I teach trading is you're just trading using pure price action, right? You're not trading with no fancy indicators. You're learning how to read price so that you can trade any market in the world. You want to trade crypto, you want to trade Forex, you can. Stocks, you can. Oil, you can. Anything that has a candlestick, you will be able to trade, because fair value gaps happen on every single chart, right? Order blocks happen on every single chart. Equilibrium happens on every single chart, right? These are all concepts that you can carry across. But when it comes to meme coins, when it comes to projects, like all of these things really, really will help you out. Okay, there we go. That's all the questions done. So on which time frames do we use the FVG? There is Kotobia, there is FVGs happening on every time frame. On every single time frame, you will see a fair value gap. However, the higher time frame holds higher power, right? You will be using the fair value gaps on the higher time frame to basically find your direction, and you use the fair value gaps on the lower time frame for execution. All right, so yeah, so let's say that you're on the 4-hour time frame, okay, and you see that there is a 4-hour fair value gap above, and that price has not tapped into yet. Okay, your job is then to go into lower time frames to look for a long targeting that 4-hour fair value gap, right? That's what I mean when you use them for direction, right? If you see a daily fair value gap that has not been tapped into yet, right, your job is to go in the lower time frames, okay, and to find an entry taking you to that daily fair value gap, right? If price is currently reacting inside of a fair value gap, right, then you can basically find, okay, where does price wants to go from here, right? You use them from direction. Okay, now going to order blocks, my G.
Yes, sir.
My G. So basically, an order block is, so there is obviously the same thing as fair value gaps, right? There is bullish order blocks and there is bearish order blocks. Okay, an order block is basically an area, right? It's basically the last candle before the move down. Okay, so when it comes to when price hits a, how can we do this? So let's say this is a support zone, right? Price is coming down towards this support zone, right? This buy zone, okay? The minute that we're going to touch this support area, okay, there is going to be a sequence of candles, right? There's going to be a sequence of candles. Let me see if I can mark these out. So the moment that you start seeing price rejecting from your support zone, from your sell zone, from your buy zone, there's going to be a point, right, that before this move up here, there's going to be a point where there's going to be a candle, right, in the opposite direction, right? So right now, obviously, a bullish candles are blue for our chart, right? For the basic charts, bullish candles are green, okay? But before this move up here, there's going to be a black candle or a red candle, right, just before it, right? There is going to be a candle in the opposite, a candle the opposite color, right, before the move up. Okay, so basically that will be your order block, right? Because also the way to confirm whether an order block is valid or not is if the candle is gonna close above the high. So that's just basically the basics, right? So look, right here we're looking at this area here, right? Price before the move down, right, that also did what? Closed below the low, right here. There is a candle in the opposite direction, right here, this blue candle, right? This is an order block because it's the last candle in the opposite direction before the move down that broke structure, right? So this is a valid order block. Okay, if the candle did not break structure and close below the low, then this is not a valid order block, right? For example, look at this candle. When we came down here and we tapped this wick, but we did not close below it, right? This is still not a valid order block. It only became valid when the next candle that opened came down and closed below it, right? You will be able to see these all the time, right? Look. Candle in the opposite direction before the move down that broke structure, right? So this is a valid OB right here, okay? Then, and also a order block doesn't have to be always just one candle, right? It doesn't always, what do you mean the last candle? The last candle in the opposite direction before the move down. Right, the last candle, this one here, you see how it's blue, then black, black, black. So the blue candle is an order block, right? Even here, right? This could also be in the bullish scenario, right? Look, black candle, then it's blue, 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 right? This blue candle, these blue candles closed above this high up here. Right, and so this has now become a valid order block, right? And you can see what did price do? We came back into it, right? We retraced into this order block and then we continued pushing up higher, right? Even here, look at this. Look, there is this candle, for example, this candle here, right? Blue candle, black, black. Did this candle close below the low? No, we didn't, right? We did not close below the low on this candle, right? So this is not an order block, right? But however, this one, look, blue, black, and the black candle closed below the low, right? So this now becomes a valid order block, right? And you can see, what did price do? We came back into it, yeah, and then we continued selling off, right? Same for here as well. Look, last candle before the down move, blue candle, black, black, black. We closed below the low, right here we close below the low, and now this is also a valid order block right here. Boom, and you can see price came back into it, okay, and then we continued coming lower, right? So especially when price is ranging and going sideways like this, it can get a little bit confusing because order blocks happen all the time, right? They happen all the time and they happen everywhere, right? But ideally, the best type of order blocks, like I said, is when we're looking for buy zones, right? You want to see an order block aligning with a fair value gap and aligning with a Fibonacci retracement. That's what makes up the best sort of zones, right? It's when an OB lines up with a fib level and a fair value gap. So let's see if we can find an example. If we were looking for, let's pull the Fibonacci retracement from this high up here all the way down to this low. Okay, boom. What do we see? Look at this. We see that we have the 786, right, lining up with an order block right here, right, the last candle before the move down, also lining up with a fair value gap, right? So there we go. This would be a very good potential sell zone, right? Because you have a fair value gap, you have an order block, and you have a fib level. So this would be a very nice sell zone that I would love to mark out. So ideally, when price would come back into this area, you would be looking for shorts, right? And this basically just adds more confluence to the order blocks, right? Because if you're just only looking for the order blocks alone, you're going to find that there's going to be a lot of times where they're not respected, right? But when you overlap the order blocks with something else, right, with a fair value gap and with a fib level, you know that the chances of that zone holding is higher. You're honestly one of the most useful person I've stumbled upon for day trading. Thank you, Jonas. Makes me very happy that you're finding some of this educational. Guess what? Does it make sense? Does it make sense now? CH, thank you for the follow. Blue, thank you for the follow. There's a bearish FVG on the 1 hour. Are you speaking about this chart right here, Kotobia? Inahaya, thank you for the follow. Inayatullah Shaikh, thank you. Fanny, thank you. You're generally the GOAT, bro. You're on the grind trying to help others. Thank you, brother. Yes, sir. That's what I want to do, man. That's what I like to do, is to help other people. Fuck yeah.
You almost hit, you almost make 3.5k people.
Oh yeah? 3.5k likes.
No, 3.5k followers.
Oh yeah? Are we close to 3.5k followers? No way. No way. It feels like we just hit 3k, man. What the fuck? We're growing like crazy.
Couple of days ago, you hit. I think it's a week.
Yeah, I think a week ago. But also the live streams when I am streaming on my computer, they get more followers because every single time that someone follows me, it goes ding 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 ding, and so basically it triggers the mind to follow, right? Because it shows the name whenever they follow me, their name show on the live stream. So it makes people want to follow me so that the name comes off and I say, yo, thank you for the follow, and everyone can see the name. People are like that. But now with the phone method, no one can see their name on the screen. So there's so many less followers. It's quite crazy how that works. Some psychological games. But when I get back onto the PC, it's going to go ding, 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 ding. G, does that make sense for you, brother? I don't know if I was able to explain that. I think I was able to explain that relatively well. The thing is, it's like you can see the order blocks happen all the time, right? There's order blocks fucking everywhere, right? Fucking everywhere. You know, this is an order block.
It could be like an extra confirmation in my strategy, maybe, you know?
Yeah, like, I mean, your strategy is previous daily high and previous daily low, right?
Yeah.
So you don't really give a fuck about order blocks too much because
no.
You know, ideally for you it's simple, right? You go onto the market and you wait for one thing only, is you wait for the previous daily high or the previous daily low to get swept. That's it, right? And where order blocks can be useful is when we were talking about the entry, right? When I was showing you how to enter from the sweep. So you could, when you pull the where is this right, for this section here, right, when you pull the Fibonacci, right, you could potentially also, if you see an order block lining up with the golden pocket or with the 0.5, then okay, fuck yeah, that could probably be a good level for me to be entering the trade, right? So that's really all you could be, these order blocks could be useful for you, is just for refining your entry, right? And even
exactly.
even like here, like for people who like, if you want to analyze it on the higher time frame too, like look, this is potentially going to be an order block, right? If this candlestick here on Nasdaq on the daily time frame closes below this low, right, now this is a valid order block zone, right, because it's the last candle before the move down. So what do we also see about this order block? It also lines up with a daily fair value gap, right? Look at that magic, right? So you have a daily order block, a daily fair value gap, and then potentially, if we were to draw a fib level, right, from the high to the low, right? Oh, look at that magic. We also have the 0.5 equilibrium, right, and also the golden pocket lining up in this zone. So this is a fucking good zone. So ideally, if price was to come back into this area, we could expect, price to then continue pushing lower, right? That could be something that we could be interested in. This is how you want to be playing with the order blocks. You think NQ will gap up? Yeah, go. Sorry.
No, check a little bit. I sent you a photo on Discord with this founded account from today, basically. That's why I didn't pass it from that amount, the big amount what I did it last time, because you have some fees as well.
Yeah. It does take you out just a little bit of fees. Yeah, they do, like a couple small ones.
So basically, it was taking like 540 from 1,467.
Yeah.
So they left me with 1,061,000. Basically, I needed 1,063,000. So
but luckily you still managed to get it though. But yeah, the prop firms, they do take a little bit of commission as well. These fuckers. They take commission on already money that they're giving you to trade. It's crazy. G, does that make sense, brother? Are you good? Generally, please let me know. Please let me know if that doesn't make sense.
Yeah.
For real?
No, it does make sense, man. Yeah, it does.
For real?
It's lining up pretty good, man. Yeah.
For real? Okay. For example,
sir.
even this is an order block here, right? Look, the last candle, right, before the move down, that closes below the low, right? I mean, this is actually the low here, right? Because a low is what? It's a down candle followed by an up candle, right? Here we have a black candle followed by a blue. That's the low. So the minute that this candle closed below it, right, this now became a valid order block zone, right? And then you could either, I mean, there's two ways of marking it out, right? On the higher time frame, when you're looking at an order block on the daily time frame, on the weekly time frame, on the monthly, right? These are obviously huge pieces of price action, right? You're not going to fucking want to mark out the whole thing, right? That's just going to be unorganized. It's huge. So what I usually like to do is I usually just mark it from the wick to the body, right? That's what I like to do, is just from the wick to the body is how I mark my order blocks on the higher time frame. And you can see price did exactly that, right? We came back into this order block, into this daily fair value gap, right? And we continued selling off lower, right? This was ideally one of the best areas. We had what? We had... Oh, we didn't actually have the golden pocket. We didn't tap into the golden pocket. Oh, that's unfortunate. I thought that we did. It looked no. Well, we had the 0.5. We didn't have anything lining up in here, any fib levels, but we did have a fair value gap and we had an order block, so that was a pretty good area.
Yeah.
Right. You think NQ will gap up or gap down? I have no idea, brother. Honestly, I don't really like to put too much energy into that sort of stuff. Like, whatever happens, happens. The only time that you're really thinking, oh, is it going to gap up or gap down, is because you potentially want to be taking a trade before the market opens so that you can, you know, be gambling your fucking money, which is just retarded. So usually whatever happens, if price gaps down or gaps up, that's where we improvise and we look for setups, right? That's going to be the time when you can just really just relax, and whatever happens, you adapt to it. EVs, thank you for the likes. HH, thank you for the follow. I appreciate it. Who else have we got up in here that hasn't said anything? Marius, you said. Gustav, you said. Kathy, potentially has no more questions. Gustavo, do you have anything else that you would like me to cover, big dog?
No, it was just that.
Yeah, and how are you finding?
ICT talked about it in the video, so I wanted just to ask, you know, so I get some more.
I mean, you know, ICT might have some fucking, you know, sciencey explanation behind it. Like,
yeah, that's what I was thinking, man. His explanation was crazy.
Yeah, he's he's talking about some orders being filled or something, orders that were not filled or something. I don't know too much how ICT explains his order blocks, but when it comes to marking them out on the chart, that's how you mark them out. And then obviously there is going to be also breaker blocks, which, you know, are a little bit, you know, that I barely use breaker blocks, but basically, like, what a breaker block is just what an inverse fair value gap is in the order block world, right? So, for example, we have this order block right here. If price was to come down to this area and we would not respect it, right, we would come straight through it, this would now become a breaker block. So ideally, when we come back into it, we would expect price to continue pushing lower, right? That's basically what a breaker is. As a starter, which strategy is good to learn and master? Honestly, this strategy right here is honestly a very good strat to start learning. The one that G is trading. That's why I really went in depth. Into it. If you look, Lucio, if you look in the Discord and you look at the educational section, you're gonna be able to find this is the latest thing that was put in the group, and this is a strategy which is very, very simple. Well, not very, very simple, but it's the best sort of strategy that I would recommend to beginners to start trading price action. Because ideally, the only thing that you want to be paying attention to, it's called the previous daily high and low strat, right? So your job every single time that you hop into the markets is that you go on the daily time frame. Immediately before you do anything, you go on the daily time frame and you basically mark out yesterday's candle, right? The day before's candle daily low and the daily candle high. Previous daily low and previous daily high, right? You can mark that out in whatever color you want, right? And so what your job is basically as a trader for this strategy is just you wait for price to either sweep the daily low or either sweep the daily high, and then that's where you would look for an entry. Now, you can also do like an advanced thing to this strat as well, which basically, if you see price is coming near the previous daily low, right, instead of waiting for it to sweep to take a trade, you can actually take a trade targeting the daily low, right? That could be also a way that you could evolve the strategy. If you find that there is not enough setups this way, right, because it does depend a lot from the market conditions, you can also take trades towards these highs and lows, right? But that's obviously going to be a little bit more advanced because you need to understand, you know, time frame pairings, and you know, you need to be understanding, you know, fair value gaps. For example, let's say, for example's purposes, we have the previous daily low here, right? Let's say that on a trading day, we have the previous daily low down here and the previous daily high up here, right? Let me mark this out so it's labeled previous daily candles high. If price is currently, sorry, yeah, Marius? Did you say something?
Did you see the next week the calendar?
No, we're gonna check it now. We're gonna check it now after this.
My goodness,
Is
all
it?
the week.
Yeah, usually the first week of a new month, the news is gonna be pretty insane, right? So, right. So basically, the way that you could take a trade targeting the previous daily low, is this a CRT strategy? I'm not sure what CRT is, Sarah. To be honest, I'm not sure what CRT is. Oh man, this guy, Elwood Expert. Mods, get this guy out. Yukio, so yeah, check that out. I hope that does make sense. King Red says keep going. Candle range theory. So basically, in order, if we were to want to take a trade targeting the previous daily low right here, right, we would then scale down to the lower time frame, for example, the 4 hour, and would say, okay, is there anything on the 4 hour time frame that could take us down here? Right, so clearly we would have been able to identify that we have, right, two bearish 4 hour gaps right here, right? And so ideally you would think in your mind, okay, if price wants to come down to take the previous daily low, then ideally we are going to get a reaction from one of these two bearish gaps, right? And then the way that you could also trade this is if you see price closing above these bearish fair value gaps, right, inversing them, then you can say, okay, price is not coming down to the previous daily low. We are now actually changing direction and coming up to the previous daily high, right? So let's say, for example's sakes, that we were looking for shorts down to this previous daily low. We see price coming up. We are reacting off this bearish 4 hour fair value gap. We would then scale down into the lower time frames, right? Ideally, I mean, this is where it gets a little bit complex, right? Because it can be so easy to enter wrong, right? It could be so easy to enter wrongly, but that's why you basically want to have sell zones, high confluence areas marked out on the charts, right? So ideally, what I would wait for, I would have personally pulled a fib. I would have pulled a fib level, right, inside of this fair value gap to see where are the areas where price is likely to react from, right? So we would have tapped the 0.618, which is the golden pocket inside of this 4 hour fair value gap, and so this would have been much easier. And in terms of entries, I would have, you know, we would have tapped it. I would have seen this. We would have had a 15-minute bullish gap right here. Right, in terms of entries, I would have waited for this 15 bullish gap to get inversed. The moment that we would have got it, we would have got inversed with this candle right here. This could have been a potentially good entry, right? Your stop loss would have been above the high, right? And then you would target ideally the previous daily low, right? And then the minute that price then comes down to the previous daily low, then you would be looking for what? A liquidity sweep, right? A change of character, right? A break of structure, inverse of some fair value gaps, and you could potentially even take this puppy long, right? So that's how you could trade both ways. Thank you. I'll check it out on Discord. Yeah, check it out. Check it out. Tuesday. Mr. Potato says Tuesday. What's happening on Tuesday? What's happening on Tuesday? Monday, no news. Tuesday, no news. Wednesday, no news. Friday, no, sorry, I'm tripping. Wednesday, pretty big news. Actually, very big news. On Wednesday, actually expect the market to get fucked up, guys. Expect the market to get pretty fucked up.
But yours is different of mine. I have the orange one as well. What is all the week from Tuesday to
Yeah,
Friday.
because you got the beginner news events, mate. No, bro, because what you need to be doing is you need to go up here on the right hand side, right? There is a little filter button right here, this little green button on the top right. You need to press this guy and you need to basically remove the orange, right? Remove the yellow. You want to keep the gray, because the gray sometimes when there is a bank holiday, it will be a gray folder. So you want to keep that on because you need to know when it's a bank holiday, when it's a good day to trade or not. So you just want to keep the red folder and the gray folder turned on, and you want to basically just remove all of this nonsense of all these other pairs, and you only want to keep USD, because USD is the news that basically has the biggest impact on the entire market, right? If something is happening to the dollar, then mostly all the other assets are going to be affected as well. Obviously, if you are a Forex trader and you're trading Forex pairs, then that's obviously different. I'm not speaking to you. But for those of you guys that are trading gold like me and trading NASDAQ, then you do only want to keep USD on.
But the orange ones?
No, fuck the orange.
For nothing?
No, the orange. Remove the orange.
Okay.
When Asia open, it's going up. Empire, brother. It's Friday, G. Asia isn't opening. Market's closing. So hard trading both ways. Big news week next week. Honestly, not that bad. But the week following that is pretty bad. Like usually the first week of a new month, the first 2 weeks of a new month, the news is pretty rough, right? We've got August 7th, we've got NFP, right? Non-farm employment change. On the 12th, we have CPI, but not actually that bad, to be honest, guys. Not actually that bad. We do want some news, because usually whenever there is no news, price will just typically just range, and it will be these yo-yo conditions, right? With this is the sort of conditions that just makes it fucking hard for me to trade. My system is when it's the yo-yo conditions, and so news actually helps that, because news will break price into a direction, right? It's rare that news is going to happen and we're going to keep going sideways. So that's why we do want some news. It should give us some pretty smooth price action. Maybe Marius just likes oranges. Yeah, I think Marius just likes oranges, eh?
No, bro. I like the beer. I don't like oranges.
Marius likes beer.
Exactly.
Eugene, you need to reach out to me, man. What are you doing? Reach out to me, Eugene. I'm waiting for you in the DMs. I'm waiting for you. Corona beer? Yeah, Kathy. Marius is the #1 Corona beer lover, man. It's not a good day if there's not a Corona, eh, Marius?
No.
How many Coronas do you drink when you go fishing?
I don't drink when I'm fishing.
No?
I am just serving.
You're serving? What's that? Like you're casting? You're casting the rod?
I mean, I pray to God when I drink.
You pray to God when you drink?
Oh damn!
Just joking, bro.
You trying to get me banned? Are you trying to get me banned on TikTok, bro?
So my job doesn't let me to drink during the week. Most of the time, in weekend and something like that.
But when you're driving and stuff, you have a beer sometimes, no?
No. I need to be zero. You crazy? After that, I'm gonna do construction job.
Yeah. Have you ever gone to work drunk before?
No, in my life, no, zero.
You have to try one day.
No. I drive a 44 tons, bro.
Yeah, I'm joking. Yeah, don't try that shit, man. Because then we want you still in the group, bro. Don't be crashing your fucking truck.
No. That is not a habit.
Drive and fly. Cathy says drive and fly. That would be the best.
In few years, maybe you drive and fly. It's gonna be very, very sure.
Hi Spikey, thanks for your good explanation. I'm just lacking capital to start live trading. No worries, Corolla. Well, you can just start trading demo and you can just get better at demo first. Or you can even just buy a funded account, which is going to cost you nothing. So no really need to have live capital. But obviously trading with a live account is way better. Because you're more flexible. You don't have to follow no BS rules. You can risk as much as you want. Not that you want to be risking your whole account, but you don't have to follow rules on a day-to-day basis. If you want to risk your full account, you can. If you want to enter 5 or 6 positions in a day, you can. So that's why the live account is nice. And if you make money on a live account, you can withdraw it that same day. Right, that's the nice part. With a funded account, you need to request a payout, and then they need to pay you out, and it's just it takes a little bit of time. But that's why, honestly, till now, and most of my trading career was literally survived off a live account. Like when I dropped out of university to trade full time, I didn't have any funded accounts. I just had money in my life, and that's how I was paying for stuff. The moment that I would make money on a trade, I would withdraw that shit ASAP. And then I would pay for what I need to be paid. And then once my bills were covered, everything else was extra. I would just keep it in the account. But obviously that was a problem though, because one of the biggest things that was actually quite fucked up was the fact that, I had some months where I didn't make any money trading, right? There were some months where I lost money. And so what happened then, right? I didn't have any income stream coming in apart from my trades. So the months that I made no money, I still had to pay for rent and I still had to pay for food. So what I had to do was I had to take money outside of my live account to pay for these sort of things. And that really double fucked me, right? Because I used to take money out of my live account to pay, and that would make my live account smaller. So every time I would be trading with less and less capital, so I would make less money per trade. And so eventually I got to a point where I literally could not fucking pay for my stuff. And that's where, the whole story is, where I ended up fucking going back home, taking some time off, and then restarting that whole phase again. So yeah, it was rough, man. I thought I was going to become rich so quickly, and I just got fucking humbled. I got humbled bad. But it was a learning lesson. Can you treat OB as FVG? What do you mean treat an OB as an FVG? They're separate, different concepts, right? It's like asking, can you treat an apple the same as an orange, right? They're still a fucking fruit. They're still a fucking fruit. Doesn't mean that they're the same fucking fruit, right? So usually you wanna combine the two, right? You wanna combine the fair value gaps with the order blocks, right? For example, here, look, we have an order block, right here. Why? Because this is the last candle before the move down, right? Look, blue candle, black, black, black. We close below the low. So this is a valid order block zone. What do we also have next to the order block? Well, surprise, surprise, magic. We have a fair value gap as well, right? So this is a good area, right? If we were to pull a fib, I can bet you that there is a fib also lining up at this zone too. Let's pull a fib from this high to this low. Do we see a fib? Yeah, 0.5 lining up perfectly. Also, we can also drag the fib from another low, right? Yeah, 0.5 still there. So yes, sir. Also, if we drag the fib from this high to this low, right, we have the 786, and this is where it gets fun, right? Because look, you draw the Fibonacci from this high to this low, right? And then you draw the Fibonacci from this high to this low, right? And then you draw the Fibonacci from this top high all the way down to this low, right? And this is where the real fun starts, because this is where you can start stacking fib levels, right now there isn't really that good of confluences. Like the only fibs that overlap is these, the 786 and the 05 in this area. So this is a good zone, right? We have an order block, we have a fair value gap, we're overlapping 2 fibs. This is a good fucking zone, right? But all the other ones, they're not really, they're not together. So that's unfortunate. That's not as fun as I thought it was. Oh, I know here, nah, no more. Well, there we go. And so you delete them once you see the levels that stack up, you delete them. There's no rules with fibs, right? As long as you're always drawing it from, let's say you're looking for retracement levels, you're always keeping the fib low, but you can change the high, right? You can draw it from this high, right? You can draw it from this high, you can draw it from this high, and so then eventually you're going to have a bunch of fib levels and you find which ones stack together to find your best zones. That's a nice little tips and tricks. Tips and tricks, man. Shap 6. Ugochukwu. Christopher, what's up, brother? What's up, brother? Christopher. T-Bash South, you're back. Yes, sir. We've been live for a while, man. We've been live for a while. My mouth is drying up. Saeed, thank you for the follow, big dog. Then OB is like the candle on the break of structure. OB is like the candle on the break of structure. No, OB is the candle in the opposite direction before the break of structure. Order block is the candle in the opposite direction before the break of structure.
Yeah, but Spiky, on the break of structure, oh my god, my monster.
He's not liking the trading. He's not liking the trading live stream. I'm making him cry.
No, not yet. He will like it soon. Anyway, on the break of structure, there's 3 candles. For example, for a oh my god,
A fair value gap is 3 candles, not a break of structure.
no. A break of for you to have a break of structure, you need also like a green candle, a red candle, and another green candle. You know what I mean?
Ah, yeah. To make the high, you need to make the high or the low
Yes,
first.
for example, or to make the high or to make the low.
Yes.
So it means that you have the last somehow, mostly the last to make the high, the last red candle.
Yeah. But the
And
thing
also
is, I know what you're saying. And it does make sense what you're saying. But look at this example. For example, here. Look, this was a low that got made right here, right? Look, we have a red candle followed by a green candle, right? Down candle followed by an up. You see this low that was made?
yes.
Let's remove this sell zone. So, look, this is where the candle broke structure here, right? We got this candlestick closed below this low. So this is officially where we got the break of structure, right? But if you look at the candle before, right, it's still a black candle, and the candle before is also a black candle. So it's not the candle before the break of structure, because sometimes, a break of structure can happen, 2, 3, 4 candles after. See what I mean?
Okay, I get it. Thank you.
like a break of structure, it doesn't have to happen like with the next candle. A few candles can come afterwards, and then we can break structure, right? So the order block is just basically the last candle in the opposite direction before price break structure, right? So we have the blue candle, and then black, break structure, black, confirm order block, break of structure, stuff like that. Yeah, this music is fucking stressing me out. Ding 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 ding.
Atera is the IT painkiller.
I've been missing out. I've been holding my buy from 476. Should I hold them? 476. You've been holding your buy. your buy position since 476? What? Where's your stop loss, brother? T-Bash. T-Bash, where's your stop loss, brother? 476 is all the way up here, bro. I don't know. I mean, I'm not a genie, Bursky. Like, yes, I know how to read the market, but, you know, I cannot tell you whether gold is going to want to come back to 476. You know, not right now, at least. Right? I need to see more confirmation on the chart in order for basically to show me that price wants to continue up in the direction. I see people putting limits on OB. Yeah, Potato, there is some people putting limits on OB. Yeah, 100%. 100%. It's mostly those supply and demand traders, right? It's mostly those supply and demand traders where they'll set a limit for an OB and they'll put their stop loss above. And then they would obviously target liquidity, right? I think it's cool. It's cool, but obviously I only set limits sometimes. Today I was looking to set a limit on gold, but we never ended up getting filled on it. But yeah, I will set limits sometimes, but it's rare. Usually, I mean, if you were to set a limit on an order block, then you would want it for it to be aligning with a fair value gap and a fib level as well, right? Because then you have like the 3 combo. If you have the combo, then a limit could be safe. But if you just have a regular order block, you know, the chances that potentially price is going to go straight through it can be high, right? My cells, sorry. T-Bash, I was about to say, damn, you've been holding buy since 76? That's fucking insane. I mean, what I would do is I would take some profit if you haven't taken profit yet. Not all of it, just a little bit, right? I would take a partial on the position. I would be moving my stop loss to break even, right? So I would move my stop loss to my entry level. So worst comes to worst, if gold was to come back down to 70, come back up to 76, you wouldn't lose any money, right? That's just one of the best ways that you can do when you enter a trade, is once price starts, you know, going in decently in profit, you always want to be moving your stop loss to break even. That's going to just save you so many unnecessary losses. Like, one of the most triggering things for me when I was, you know, getting into my training journey was the fact that sometimes I would be entering some really beautiful positions and I would be in profit, and I didn't know how to set my stop loss at break even. And so, you know, these positions that were in profit, they would come back down sometimes and they would stop me out. And I'd see my account from being in, you know, good green in healthy profits to all of a sudden I'm stop loss, and I'm like, what the fuck, right? Have I just turned this winning trade into a losing trade? That's ridiculous, right? And so that's why, yeah, it's like the most annoying feeling ever. You know, you've done the right job. You managed to catch a trade where price went in your direction for a little bit, and you just forgot that extra step of managing your trade, right? You need to just manage your stop loss and put it to break even. Now, you don't want to do that too early. You don't want to do that too early, because there is sometimes when you will move your stop loss out of fear, right? So you'll be like, fuck it, let me just move my stop loss really quick to break even. Which sometimes, you know, if you're moving your stop loss based on how you feel, then that's an issue. But if you're moving your stop loss because you see, you know, price going already into profit a lot, and you say that, okay, if price comes back now to my entry, it would be ridiculous for it to come into the negative again, then that's when you put your stop loss at break even. Right? You don't put it at break even just out of fear of losing capital. You still need to accept your risk, right? You need to accept the risk that you're putting on the trade, but that's just an extra step. Sedola, thank you for the follow. Yeah, he scared me as well, Marius, huh? He scared me as well. T-Bash, that was insane. Okay, thanks, bro. You got you, brother. Trader Forex, thank you for the follow. I feel you. Yeah, Kathy, it's one of those painful ones, man. Seeing a winner turn into a loser, that's cooked, man. That's cooked. I need a video on how to set BE efficiently while giving your trade a room to breathe. Okay, yeah, I can definitely make that. But Ukiyo, if you go in the Discord group, you go to tutorials. I don't know if you've already seen it. In tutorials at the bottom, I made a video on how to take partial profits. So you can just watch that video and it's going to explain to you how to also put your stop loss at break even, right? How to take partial profits on MT5 and move your stop loss to break even. So watch this video in tutorials. It's going to be helpful. And basically a simple rule that you want to be respecting is that the minute that you enter a trade, okay, you don't want to be setting your stop loss at break even until the trade hits at least a 1-to-1 risk to reward ratio, right? So let's say that you entered the trade here, okay, let's say we entered this buy, right? We would have our stop loss below the low, okay? So a 1-to-1 risk to reward ratio would be where? Right here, look, 1-to-1, 1-to-1. So it means that if we were risking 100 euro, right here, we would be in profit 100 euro, yeah, 1-to-1. So this is ideally an okay point to put your stop loss at break even, because you've already technically doubled. Well, you're at the initial, you're in profit what you risked, right? So you don't want this puppy to go back. Anything less than a 1-to-1, I wouldn't advise you to put your stop loss at break even, because the chances that price comes down to your entry level, takes you out, and then continues into the direction of the trade. You know, it happens sometimes. It's one of the most frustrating things, but you know, that's just sometimes what happens when you put your stop loss at break even too early. And then there's also going to be some, yeah, go for it, brother.
Can you show me the FIB settings for a second?
I hit a 3 BE just today. You hit a 3 risk to reward, or you hit 3 break evens just today. Yeah, so potentially you might be putting your stop loss too early. You might be putting your stop loss at break even a little bit too early. Or it's just unlucky price action, right? Or it's just unlucky price action because, like, honestly, guys, there was this people. Some of you guys get angry. Like I used to also get angry. I still sometimes get angry when you know, price will take me out at break even and then potentially go and hit my take profit. That's one of the most annoying feelings in the world. Like, completely understandable. I don't think that we will ever get used to that feeling, but I think the mindset that we can adopt when this happens is the fact that we can think, okay, it's better that we didn't lose any money than we lost money, right? It's almost like you can almost brainwash yourself into thinking that you never really looked at the charts before, right? You're starting fresh. It's almost like if I was in a trade and I would get stopped out at break even and price would hit my take profit, I would tell myself, oh yeah, that was just a practice trade. I would tell myself, that's just a practice trade. It's fine, right? I didn't lose any money. Let me just start afresh, right? If I see another setup, I'm going to take it. But if I don't, then today was just a practice day, right? It was just a learning day. And then that just automatically just disconnects yourself from, oh, for fuck's sake, right? We hit break even. Oh, that's so annoying. You know, I keep getting break even. So it's just a little bit of that mindset shift that you can have. Just a small tweak like that. Oh, today was just a practice day. It's fine. I got stopped at a break even. I followed my rules. You know, unfortunately, price hit TP. My analysis was right? I knew where the market wanted to go. Unfortunately, it just wasn't my money to take, right? That's how you want to be brainwashing yourself, because you want to be on the same side of your team. You want to be on the same team as your mind, right? In trading, your biggest asset is your mind. That's what your biggest asset is. So you want to be on the same team as your mind. If you're against yourself, right, every single time that you lose a trade, you shit on yourself, right? You're being nasty to yourself. You're telling yourself you can't trade. You're telling yourself that you need to give up, right? You're not on the same team as your mind. You need to be on the same team as your mind at all times. And sometimes it's hard. Of course. But as long as you realize that, that's the first step to trying to improve, right? You need to encourage yourself, because no one's going to encourage you. No one is. Trading is so low, brother. Trading is so low. There ain't nobody going to tell you what you need to do. Obviously, unless you're in a community and you've got me on live stream, but the majority of you guys don't have a community and are just trading on your own and trying to figure it out. So you are your own guidance, brother. You are your own guidance. BE is still a win because you followed the rules. And hey, by the way, just came in. What's up, Michelangelo, brother? Welcome to the fucking live stream, G. Welcome to the live stream. Okay, fair. Yeah, that sounds pretty fair. That sounds pretty fair. And it's true. A BE is still a win because you didn't lose any money. And also, losses aren't necessarily a bad thing either, right? As long as you're learning from your losses, then it's all good, right? It's just a business expense. You need to be learning from your mistakes to improve better, right? Losses are part of just the business expense. It's the price that you pay for education, right? People spend money learning a course, going to university, right? You pay for education. In trading, your losses are your payment to the markets. You're paying the market for your education. Don't be one of those students that just pay for fucking school and they don't actually learn anything because they don't learn from the mistakes and they're just being retarded, right? You'll never really go far in life if that's your mindset. You always want to be learning from your mistakes and trying to get better, right? As long as you're just 1% better every single day, just 1% better. That's why I fucking named the Discord the 1% group, because we're just focusing on just trying to get better, just 1 fucking %, right?
Hell yeah.
Fuck yeah. I'm doing good, just Michael. I'm doing good, brother. Just a little bit tired. It's midnight here, so I'm gonna hop off live stream. It's been a good one. It's been a long one. It's been a fucking long one. Hey Spiky, how are you? I'm doing good, brother. What's the best way to identify trend other than support? And what's the best way to identify trend other than support and demand? You mean supply and demand, or you mean support and resistance? No worries, Michael, bro. I think we'll catch another live stream soon, bro. We'll catch another. Tomorrow I'm not gonna live stream, but maybe on Sunday night. On Sunday night I'll be back on live. What's the best way to identify the trend? I mean, obviously the trend in simple terms, right? It's just gonna be in an uptrend. It's gonna be a higher high and higher low, right? So that's just a simple way to identify the trend, right? If price is making higher highs and higher lows, if price is in a downtrend, it's making lower highs and lower lows, right? If you're struggling to see the trend, then you can change your candlesticks to the line chart, right? I always say this. You change the candlestick to the line chart and it's going to basically allow you to identify the trend a little bit easier, right? Remove all the noise from the candles. Also, another way that I like to identify the trend, which is a more advanced way, is by looking at the fair value gaps, right? So basically I will start off on the daily time frame and I will be asking myself, are we respecting or are we disrespecting? What type of fair value gaps are we respecting and what type of fair value gaps are we disrespecting, right? If I see on the day that price is respecting bullish fair value gaps, right, and disrespecting bearish fair value gaps, then it shows me that the trend wants to be bullish and the trend wants to continue higher, right? Because we are respecting bullish gaps and we are disrespecting bearish. If we hop onto the charts and we see that the market is respecting bearish but disrespecting bullish, then obviously we think that the trend is wanting to come lower. So that's how you can use fair value gaps to determine direction. That's why fair value gaps are so fucking important. So important. So important, right? We use fair value gaps for entries. We use fair value gaps for direction, okay? Higher time frame fair value gaps for direction, lower time frame fair value gaps for entries. Also, another thing, you can also use break of structure, right, to determine the trend, right? So, this is going to get a little bit too into detail. I mean, not too into detail, really. It takes a little bit of explaining to do. I will dedicate a whole live stream to this, but, ideally, the first step to determining what a break of structure is to learn what a high and what a low is, right? A low, I'm not going to get too much into detail. I'm going to fast forward it. A low is just a down candle followed by an up candle. This is a low. Down candle followed by an up candle, 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 low. Okay, that's what a low is made out of. A down candle followed by an up candle. Okay, what is a high? The high is the opposite. It's an up candle followed by a down candle. Okay, look, up candle followed by a down candle is a high, right? Up candle followed by a down candle is a high. Up candle followed by a down candle is a high. Up candle followed by a down candle is a high, right? This is how you want to be identifying highs and lows in the market, right? And so what a break of structure is that once you've identified your highs and what are your lows, right? Ideally, you want to be saying, okay, have we broken structure to the upside or have we broken structure to the downside? The most recent break of structure, right? So right now, on the daily time frame, what are we? We are bullish. Why? Because the most recent break of structure is to the upside, right? This is the high right here. Yeah, up candle followed by down candle. Up candle followed by down candle is a high. This is a high, price closed above it, so we are bullish on the daily time frame. Perfect. Now let's scale down to the 4 hour, right? What is the most recent break of structure that we had? Right here, the most recent break of structure that we had is to the upside, right? This is the high, up candle followed by a down candle. Up candle followed by down candle, this is a high. What did candle do? We closed above it. So we broke structure on the 4 hour to the upside, right? So the daily is bullish, the 4 hour is bullish. Now let's scale down to the 1 hour time frame, right? What is the most recent break of structure that we got? It's actually to the downside, right? Look, this is the low that we made, down candle followed by an up candle right here. This is a low. And what did we do? We closed below it. So we'd have the daily time frame is bullish, the 4 hour time frame is bullish, but the 1 hour time frame is bearish. Interesting. Okay, so how do we know if price wants to continue the 4 hour and the daily trend? Well, we need to wait for the 1 hour to become bullish, right? Because that's how we want to use these higher time frame alignments. Does that make sense? Right? The daily is bullish, the 4 hour is bullish, but the 1 hour is bearish. So how do we know if we want to continue pushing higher? Because we need to wait for the 1 hour to become bullish again. When the 1 hour is bullish, then we're going to know, okay, price finally wants to continue higher. So the question in your mind is going to be like, okay, what do we need to do on the 1 hour time frame in order for it to become bullish, right? What do we need to do? If we look at the 1 hour, what do we clearly see? We see that we have a bearish fair value gap right here, right? We see that we have a bearish 1 hour fair value gap. So in order for me to start thinking, okay, if we want the 1 hour time frame to turn bullish, what do we need to wait for? We need to wait for a 1 hour inverse to the upside, right? Because this is the only area that is keeping the 1 hour bearish, right? We expect that if price was to come in here, we expect price to continue lower. But the moment that we inverse this 1 hour gap, we're like, oh, holy shit, maybe the 1 hour now wants to flip bullish. Maybe we might actually want to continue pushing up higher, right? And that, guys, those are the best days to be looking for longs, right? When the 1 hour time frame is bullish, the 4 hour time frame is bullish, and the daily time frame is bullish, right? That is how I personally follow and look for the trend. Fuck these, higher highs and higher lows and daily and down and lower highs and lower lows. Yes, okay, yes, that's how the market moves. That is how I explain things to beginners getting into trading, because it's simple, right? But once you start getting into the price action, into the juicy stuff, right, learning how the candles look and move, this is how you want to be identifying the trend, is by break of structures and by fair value gaps, right? This is how you want to be doing it, because it is so powerful. It is so powerful, right? And this will also tell you the days that you should be trading and the days that you shouldn't be trading, right? For example, if if every time frame is telling you a different story, then that is a day that you potentially want to not be in the market, right? If the daily time frame has a break of structure to the upside, right? So the daily time frame is bullish, then the 4 hour time frame has a break of structure to the downside. So the 4 hour is bearish. So you're thinking, what? The daily time frame is bullish, but the 4 hour is bearish. right? And then you go to the 1 hour, and the 1 hour is like going sideways, right? The 4 hour time frame's in the opposite direction to the daily. The 1 hour is going sideways, right? So you're just like, this doesn't make sense to me, right? It's better if I just don't trade. It's better if I don't trade, right? That's how you want to be identifying, you know, good days and bad days to trade. I hope that makes sense. Anyways, with that being said, guys, that is some big source, right? That is some big source, guys. You know, obviously for some of you guys, that might be the first time that you're hearing this. It won't be the last time. I will repeat this. As I said, I will dedicate this a little bit more, but I did actually go more in depth into it than I thought I would. But that's basically how I find my trend, right? That's basically how I know, okay, are we bullish today or are we bearish, right? Are we disrespecting? Which fair value gaps are we respecting, right? Are we respecting bullish fair value gaps or are we respecting bearish fair value gaps, right? Have we broken structures to the upside or have we broken structures to the downside? Okay, and the most important thing that you want to be looking at is the most recent break of structure, right? Because some of you guys might get confused because you look at the 1 hour time frame and you're thinking like, oh, the 1 hour time frame is bullish, right? Look at this. We look at these candles going to the upside. We closed above the high. Look at this. This is a bullish. But then if you actually look at the most recent break of structure, which is right here, right? We closed below the low. So the 1 hour is bearish until we then make what? A high, right? Until we make a high on the 1 hour time frame, and until we close above this bearish fair value gap, we are still bearish. The moment we break structure on the 1 hour back up to the upside and we inverse, right? That is the moment that we know the 1 hour wants to rotate, and so the 3 time frames are aligned. Anyways, with that being said, guys, I appreciate those of you who stuck with me throughout this whole live stream from the beginning to the end. You guys are the best. You guys are honestly the ones who are going to see the most progress in your trading, right? Because you're willing to dedicate your fucking time to learning, which is basically the most important part, right? A lot of people, they want to become successful in trading, but they're not ready to put in the hours, right? Just think about me. I've been trading for 5 years and I'm still on the fucking market every single fucking day, you know, from morning till night, speaking about it. And so you can imagine just someone who is just getting started, how much work you need to be putting in, right? If the people who have been trading for fucking years are still putting in the work, you know, what makes you think that you don't need to, right? So put in the fucking work. Thank you for you guys being in here. Hope it was educational for at least one of you or two of you. If I helped one of you, that's already a W. And I'll check Nas IB I'll check Nas on Sunday night. There's no point in checking Nas and doing analysis now. We'll check in on Sunday night. Olea, thank you for tuning in. Top tier, thank you. Thank you so much. See you in the next one. Have a lovely weekend, guys. I will see you on Sunday night for the week breakdown analysis, so we can see where price wants to go for the week, so we can prepare the levels and we can make some fucking money. If you guys are not in the Discord yet, it is completely free, as the contact says, if you're trading on PU Prime or Vantage. So if you have an account open with PU Prime and Vantage and you feel like my way of teaching is beneficial for you, please just reach out, just say something in my DMs and I will reply to you. I appreciate every single one of you. Thank you so much and have a lovely weekend. Peace and love, peace and love, peace and love, peace and love, peace and love.